Hello everyone and welcome to Accounting for Foreigners. For those of you who see me for the first time, I'm Iskra Kirilova and I'm a founder and a manager of Crystal Account Consulting, a company that is providing accounting and tax consulting services in Bulgaria. Those who follow my videos know that each Wednesday I publish a new video, and I always do my best to provide info that is specific and therefore may be not widely known to the public. As I know how difficult it could be for the foreigners who just start their business in Bulgaria, I hope the info I provide helps you to understand better the rules, the legal environment, and in general, to give you more better insights so that you could do your business planning more easily in Bulgaria. Therefore, please do not hesitate to ask your questions to me. And if you like the videos and find the info provided as useful, please share it so that it reaches more people that may search for it. Several weeks ago, I started the topic about company costs, and in particular, the costs that are subject of a special tax treatment according to the provisions of Bulgarian legislation. And as the topic is very wide, each time I'm talking of one special category of costs. Today, we are going to take a look on the costs related to mixed usage of company assets. About the actual tax accepted costs, the situation is the following. If you use a company asset, that means there is an invoice for purchase or rent of the asset issued to the company, stated as a customer in this invoice, and you use this asset for company purposes only, it's necessary for performing the usual company activity like car, office, laptop, mobile, etc. It is 100% tax recognized cost. If there is a combined usage of company assets, owned once or rented once, it doesn't matter, for both company activity and private purposes of the individual using the asset, the basic rule is the following. If you use it both for company and private use, the private usage of company assets is taxable cost. It is on private use, your company has to pay 10% corporate tax, or in some specific cases, it is even treated as an income to an individual itself, and therefore taxable income of the individual. We should make clear the following basic points. All this mixed usage of company assets means that related incurred costs are paid by the company. They are booked as company costs, but the usage of the assets itself is split to one related to performing the company activity and another one related to private usage. Also, the cost related to private usage of company assets is acceptable for tax purposes. I mean, for the purposes of company profit taxation with corporate income tax, but is taxable with taxes on costs. Related to mixed usage of company assets, both tax rates are 10%. The amount of the tax on costs itself is also acceptable cost for the purposes of company profit taxation with corporate income tax. Now we will take a look of the most common cases of mixed usage of company assets. First such a case is for real estates, and the situation there is the following. If you sign a contract via your Bulgarian company, for example for renting an apartment and use this apartment as your company office solely, it's acceptable company cost for tax purposes. If the apartment is used both for office and your private purposes for living, A percentage of the rental cost is accepted for tax purposes. The rest cost is taxable with 10% corporate tax. According to Article 215A of Corporate Income Tax Act, the percentage of tax-accepted costs is formed as a ratio between the area used for company activity, i.e. office, compared to the total area of the place. Respectively, the ratio for usage of company assets for private purposes, for living, is formed based on the same logic as the one related to company activity usage. Another criteria that can be used for separating the usage of company assets and respectively the costs related to it, to such used for company activity and such used for private purposes, is the time within the period the asset is used for company activity and for private purposes. For instance, if you use the apartment 1 month, which means 31 days, multiplied by 24 hours per day, it results in 744 hours per month. And you use it as an office 8 hours daily during the working week. For 1 month, it is 21 days multiplied by 8 hours daily equals to 168 hours monthly. And in this case, the ratio for company usage will be 168 divided to 744, which is actually 23% of the time. Respectively, 23% of the rental costs are accepted for tax purposes. The rest 77% of the cost is not tax accepted. It is taxed with 10% corporate income tax. You should have in mind the following. No matter which approach the company adopts, it should be based on solid grounds. The company should have in hand solid evidences as documents or using another trustworthy means supporting the forming of the ratio. Therefore, as the time method does not provide such solid evidences, and therefore is enough reason for arising disputes with tax authorities in case of tax audit, most of the companies prefer the first method based on the area. It's easier to separate, for instance, 2 rooms with its respective belonging area out of 4 in one apartment, which are furnished and equipped as an office, and based on their area compared to the total area of the place, to form a solid tax accepted ratio. Same principle as above is valid for using company cars. Rented ones or own ones, it doesn't matter, as they are another very common case of combined usage of company assets. So the situation here is the following. If you can prove how much is the private usage using trustworthy criteria, for instance, for the car, you provide detailed report listing all the kilometers passed with all the additional details like destination, addresses, etc., showing clearly and without any doubt what is usage for company purpose and what is private usage. The company usage and related fuel cost, maintenance and materials, depreciation of fixed asset if applicable, is recognized for tax purposes. The rest percentage of the cost is treated as personal usage and therefore it is taxable with 10% corporate income tax. For the cars, the Corporate Income Tax Act says that the criteria for separation the costs to private ones and respectively company ones is either the kilometers passed by the respective car on private purposes as a percentage compared to all kilometers passed, usually for 1 month period, or the time the vehicle is used for company and private purposes. The same assumption for using the time as criteria I shared above in the case for real estates is valid also here in case of usage of cars. Therefore, almost 100% of the companies use the criteria of the kilometers passed. As this process of dividing the car costs and providing all supporting documentation takes a lot of productive working time in administrative efforts, the law foresees the option to use a ratio of 50% in case of mixed company and private usage, without a necessity for providing supporting documentation. And therefore, it is very preferred method, especially in case of usage of a vehicle by employees on managerial positions and working shareholders. That practically means that the usage of cars for company activity is tax recognized and acceptable as necessary cost, a percentage of it, of course. The rest related to private usage is taxable with tax on cost of 10%. The situation with using of other common company assets like mobile phones, laptops, etc. is the following. Basically, for all the rest of the company assets, except vehicles and real estates, the situation is similar to the one with the cars. The only difference is that unless the company can prove in an unquestionable way another reasonable base for splitting the costs, the percentage of tax accepted cost in case of mixed usage of this asset is 80% without any other supporting documentations or calculations. The rest 20% of the costs are treated as used for private purposes and therefore are taxable with 10% taxes on costs. As it is hard to prove private use of this type of assets, especially laptops and mobile phones, rarely a company in Bulgaria declares a private usage of such type of assets, unless there is a very solid grounds for the opposite. While for the cars and the real estates, you should be very careful because these are the main categories that are monitored by tax authorities. In the next video, we will take a look separately on the last group of costs taxable with tax on costs, namely the social costs, known also with their popular name fringe benefits, as they are very common and popular in Bulgaria. I hope the provided info helps you for more precise tax planning of your company costs and budget. As the matter is very specific, still, my advice to you is to use your accounting consultant. You can contact me too. I will be glad to help you with the accounting and consulting services my company provides. You can reach me on the email, on the website, via the Facebook or LinkedIn page of Crystal Account Consulting and my personal ones, also on my YouTube channel, Accounting for Foreigners. Feel free to subscribe and to follow all the videos I'm uploading each week. Your questions and comments are welcomed and appreciated, so please do not hesitate to ask, to get in touch with me, and I'll do my best to answer you. Thanks for watching this video, for all your questions, comments and shares. Till next Wednesday, stay fine, stay tuned, and see you!